At the India Today Conclave East, so far we've had an opportunity to speak about politics, we've had an opportunity to speak about history, culture, civilization, nationalism. It's time to talk about the economy and about commerce. And how we can look at the India growth story at this moment, and especially in the context of what's happening in the eastern parts of India. And we are delighted to be joined by the chairman of the RP Sanjiv Goenka Group, Mr. Sanjiv Goenka. It's fantastic to have you with us, and thank you once again for joining us here at the India Today Conclave East. I want to start by getting your macro sense of the India story as you see it from your conglomerate in terms of how we are on the back of the pandemic, because there are lots of global headwinds that we are facing. The Russia-Ukraine war, interest rates which seem to be rising with no bottom and with no defined top which is clearly visible, and we've got a time where inflation rates are continuing to rise very much. So how do you see all of this impact the India growth story from your prism?
You know, I think the headwinds in the global economy definitely impact everyone, including India. But having said that, we are in a much better position than any other country, or most other countries. And I think the internal story is completely intact. The confidence is high. The stability is strong. And I think some investments have been announced. Some more will probably be announced. I think people are just waiting to see the end of the Russia-Ukraine situation and things like that. And just a couple of these factors, and then you will see a flurry of investments. That's my estimate.
I remember the conversation we had at the same stage when we'd come for the East Conclave, and that time as well, your concerns were similar. The headlines at that time were different. They had to do with the pandemic and the uncertainty on account of the pandemic. But this lingering uncertainty, previously on account of the pandemic, now on account of interest rates, inflation, the war, and the impact that this lingering uncertainty has on investment plans for corporates such as you.
You know, any kind of uncertainty definitely impacts the sentiment. But COVID, when it hit us, was a huge uncertainty. Everyone was scared for their life. Today, it's a political situation internationally. The Russia-Ukraine war, the impact it has on the oil prices, the impact it has on the inflation. I think the investment plans are drawn up by and large, but I think people are just waiting to announce it. And once there is an end to that situation, you will probably see a huge rush of investment happening in the country.
But from a macroeconomic perspective, India Inc. holding back its investment plans at a time when government finance is already stretched, because you've got crude prices globally which are on the ascendant, creates a situation where you have a chicken and egg situation, where the government is saying our capacity to spend on capital expenditure projects is now limited because our fiscal headroom is lesser. Corporates such as you very logically would say we need this uncertainty to end before our investment plans kick in, and that then slows down the whole economy's growth prospects.
A couple of years ago, you had underutilized capacities. Today, capacities are utilized. You have industries like steel, cement, paper, which are doing very well.
As a conglomerate, what would be your capacity utilization levels at this
It's now, I think, 100% across all our factories.
But some would then say that you've delayed investment already, that this should have started in the mid-70s, and by now you should be in a situation where you're waiting for new industry to come into life.
You know, it's always relative, but if one had to look at a very simple situation, in the last 10 years, our asset base has grown from 7,000 to 52,000 crores. And I'm not sure that's reflective of a slow investment.
This period has also seen the group move from being largely B2B to now being more and more on the B2C side. Can you talk us through some of the changes that were required internally in terms of employee attitudes, behavior, management thinking to be able to respond to this change?
significant. And it's a very conscious move. We had decided a few years ago we will get away from government intervention intensive businesses. We will reduce our dependence on that. We will get into B2C. And you will see a much greater emphasis now on our new age businesses, FMCG, retail, sports, all of which are helping us connect with the consumer directly. And that will be the thrust, more and more thrust going forward. Of course, we are investing in our IT-enabled services business. We are investing in our chemicals business. We continue to invest in our power business. So we are investing across the board. But the emphasis will shift significantly towards these new age businesses.
Let's speak of retail and FMCG, which you just mentioned. In retail, you're up against the really big boys, whether it is domestically, the might of the Reliance empire, internationally, a huge conglomerate like Amazon, and that's a huge challenge. Now, how do you, and while of course you're very cash rich, but these are businesses that could burn a lot of that very, you've made a lot of effort to build up those cash reserves, and then you're up against people with much bigger pockets.
Well, I think they are in a different league. We are in a different league. But having said that, we've been conscious. We've not taken any debts for our retail business. We are virtually debt-free. That's the first point I'd like to make. Second point is we are growing, but we are growing small. We are growing in chosen geographies. So for example, Bengal, in Uttar Pradesh, in coastal Andhra. And we are focusing our growth on these cities where we don't need to spend in the back end. It's just the expenditure on the front end. There is no additional investment in marketing and promotion and people. And so we are trying to do it this way. Operating parameters, we are doing very well. But yes, the bottom line is yet to turn positive.
But do you have the stomach for a fight in cash-intensive business, given the fact that in the B2B sector, you've had very sustained and continuous cash flows. It's been very, very predictable in some senses. And here it's not. We saw in different circumstances what happened with the Future Group, for example. When you're up against the big boys, things can go south.
I said it at the Business Today platform, and I'll say it again. We have no desire or no intentions to become another Future.
And does that then mean potentially that you would be open to divesting some of these new businesses that you built out to ensure that you don't get into that kind of a situation?
Well, quite honestly, if you look at our FMCG business, we pioneered India's entry into guilt-free snacking, into Western snacks, where we've created a market. We've now got into the space of personal care. And our products are products for a difference. It's in the mass premium segment. So they are products which generally in the past would have been reserved for the rich, but they are now made affordable. And they're products with a difference. For example, the shampoos, they have natural chemicals where when you perspire, the hair doesn't stick to your head or scalp. The things like this. We've not had a campaign. We've launched. It's been a soft launch. And it's been very well received. So these are businesses that we are going to grow and grow very aggressively. We got into Ayurveda. And we took a year or year and a half to actually get the processes of that company right, to get the production systematized, to get the procurement processized. And now we seem to be like, again, we are going to be launching Ayurveda with a difference. So we will have a Chyawanprash, but we will have a diabetic Chyawanprash in addition to a Chyawanprash. So it's... Those are those little value additions that we are doing across the board in all our products now. And these are things that we think the potential is going to be huge. The market is humongous. And I do believe that we're going to be in it for the long term.
And these aren't cookie cutter businesses. These are differentiated products with a particular niche that you're aiming to target. Now, one of the big headlines at this time has been around the winter that seems to have set in India's startup sector. Now, you have a fund that you run of your own, which is about, say, 100 CR. Can you give us a sense of how you look at India's startup story at this moment, and as a successful entrepreneur, businessman, your advice to those who thought they were doing well or that their plane was set for takeoff and now suddenly don't know when the next round of funding will come and at what levels?
You know, first of all, I think hats off to all these people for their vision, for their guts, and for their ability to have raised finances in the way they did. But in my thick head, if a business keeps burning cash and keeps making losses, are valuations sustainable? I mean, in the long term, I'm not sure that's going to happen. I mean, several years ago, you had the dot-com things, and you know, all dot-com companies were valued hugely, and then they all went bust.
Did you see this freeze coming? Did you see the winter set?
No, quite honestly not. But I'm very happy to state that our own venture capital fund has done very well. We've got 7 or 8 investments only so far. We've had one exit, which has been fantastic. All the companies are trading at between 4 to 8 times revenues from the time we invested, which was 2 years ago, roughly. And the valuations are, I don't know, 7, 8, 9 times.
But those are valuations based on the last round of funding, and now you don't know,
we don't know
when the next round happens what the actual value of that business is.
Absolutely.
Or what the current value of the business is.
Absolutely, but the fact is that they've done well. They've done as well, if not better, than most of the more established funds. So we will now actually put in more money because we now have understood how to run this business and how to evaluate businesses. And we will also seek capital from outside.
That's interesting. So how much more money are you looking to bring on the table yourself? How much money are you looking to raise? And what sectors are you looking at to spend that money in? And importantly, how are your investment decisions now different from the decisions you took when you went out to the market first?
So far, it's been largely in the FMCG space. Now we'll broaden the horizon and we look at other spaces as well. Initially, we didn't know what really went into a startup. I mean, you know, and for example, one of our first investments was something that we thought, as a group of potential investors, the product was brilliant. It was a product that we would consume. But that's not the way to look at it. And we've learned. Fortunately, that's the company where we've had an exit. And that's the company which in our portfolio was not performing that well. But we've had a superb exit to a multinational. And we're very delighted. But now we look at it far more clinically. And one of the key things that we look at when we evaluate a company is, what are the exit options? Who are the target companies who would buy that company? And how that portfolio fits in with theirs? Are they looking at those products?
It's interesting that you mentioned selling out to somebody else rather than going in for a public listing, because in the startups that have gone in for a public listing, they're now facing very serious problems when they're being evaluated on a quarter-to-quarter basis.
So again, my own thinking is a public listing is relevant once you start making profits and sustainable profits. Otherwise, an initial valuation may be there, but it's not sustainable.
The one business that I'm sure everyone sitting here would identify with very closely is what happens in IPL. And you first ran Pune, now you ran Lucknow, you came in third. The team did well, didn't end up the winner. How disappointing was that, and how did Pune compare with Lucknow?
Pune was a short-term franchise. It was for 2 years. So we had to create or try and create an impact in these 2 years. So the first year we were number 7 out of 8, so second last from, in the list. And the second year we were number 2. Disappointed that we didn't win then, but that is sport. But the fact is that in the space of 12 months, we were able to go from being a losing side to being a potentially winning side. When we got the Lucknow franchise, the attempt was to create something which is lasting. So we looked at younger players. Most of our players, with the exception of 1 or 2, are very young. So we're looking at building a team for the long term. We were trying to have players who are multifaceted, who can do different things. And we do believe it sort of worked, that strategy worked. The team is very solid, very good. And I think for the first year we did extremely well, but we had a team that could have won. And so yes, it is disappointing that we didn't.
When I looked at your investment decisions, given how you are generally perceived as being a very careful investor, you went out and spent more on an IPL team than anybody else, including Gautam Adani and Mukesh Ambani, but that was back in the day when they bought at a much lower level. How much of that was fascination with the sport? How much of that was an ego play? Kini, I want to own an IPL team no matter what it takes, let's break the bank.
You know, I'm very happy that I own an IPL team. But I won't invest 7,000 crores just for that feeling or just for the vanity of owning a team. Forbes, before the latest broadcast deals, valued us at 8,100 crores. So which was already 1,100 crores above our investment. I presume we'll be valued at higher rates after this broadcast deal. So we are already doing well. And what was publicly perceived and what I had worked out on paper with the then broadcast situation, today our actual investment, the net present value of the investment, will work out to 916 crores. Just 916 crores. So compare that with Delhi Capitals, which went for 1,100 crores for 50%. And this is 916 for 100%.
The big difference, though, is that if it is, say, a power utility company and some part of the operations are out of line, as chairman and chief executive, you can speak to your team, try and get them to fix it. Now, this is cricket. If the team has a bad day out or a series of bad matches, there is nothing that you can do financially in terms of being able to get the team to perform. So how different is it running an IPL team versus any of your other businesses?
It's different. It's very different. It's a sport. And in a sport, somebody may have a rush of blood. The other team may play much better. And but at the end of the day, if you're consistent, or by and large consistent, you will get to the playoffs. And then it's anybody's game at that point in time. But we were not particularly happy with our management team. So we changed the entire management team of Lucknow Super Giants. Everyone we sacked. Because they did not deliver. There were issues of conflict of interest. So we said, just go. So we will take difficult decisions if we have to take them.
That's interesting. I want to talk a bit about your advice to young entrepreneurs in the eastern part of India or across the country who are looking to start out now, given the headwinds that they're facing in terms of macroeconomics, in terms of the ability to raise funding now versus a couple of years ago. The fact that people are far more bottom line focused now than they have been when the eye was more on valuation metrics rather than just on profit numbers.
You know, it's a very simple thing. This is probably as good a time, if not better, to do a startup. Capital is there. Crazy capital is not there. But capital is there. So if it's a sensible idea, if it's workable, you will get financing. You will not get financing which will give you access to a Mercedes car or something in the first instance, possibly. But you will get enough capital to carry on with your business and grow it to the next level. And if you've done well, then you'll get the next round of funding. So just believe in yourself and be true to your vision.
You mentioned that the parameters in which you are evaluating businesses for your venture capital fund have changed. Do you want to elaborate on that and explain from the perspective of an investor what you're looking at now versus what you were looking at earlier, and the difference from going from a scenario where venture capital funders were valuing valuation much more than bottom line, and how that seems to have changed now completely?
So, as I said, initially we were looking at things from whether the products excited us or not. Now we are looking at it from the market potential, from competition in that area, from pricing of those products, from the costing of those products, the management team, their bandwidth to deliver, and what is the potential exit. So one of the questions I ask, not that they come to me for a call on the investment, but if they did, like they did in one case, and the question I asked was, who are your potential exit options? So IPO, yes, of course, forget that. But if it was not an IPO, which companies would buy into this company potentially? And why would they do so? And you start looking at it from that lens, and it's another filter. And maybe 50% or 60% of the companies that you were evaluating go off.
It's very interesting. When we were chatting in the build-up to this session, and I asked you about your venture capital fund, you said, let me check with Shashwat if I can speak about this in public or not. And he's sitting there. So I want to ask you, how much of the decision do you leave to the next gen? We saw Mukesh Ambani announce recently change of the governance architecture at Jio Platforms. How much of it do you genuinely leave to the next generation, and how much of it is, you let me know what you're thinking, but the ultimate decision is mine?
He runs the FMCG business, he runs the retail business, he runs the venture capital part of the business. Now the truth is, in these businesses, I don't even know what's happening excepting what I get to read in the monthly reports. So the decisions are totally his and his team's. In the other businesses, I actually sort of penetrate and dive. But in these businesses, I don't, because I know he does it.
So tell me, as you look back at your time and what you learned from your father, what are the most important lessons you're hoping that the next generation imbibes in the way they go about shaping their business? Because we've seen, you've grown the business that you inherited substantially, but we've also seen inheritors sometimes turn out to be wealth destroyers. So to build businesses and to sustain and grow what you inherited, what do you think are the key ingredients? Because especially in politics as well as in business, there's so much talk about dynasty and the ability of a dynasty to make or break a legacy.
To my mind, it's not about dynasties or families only. It's about the competence of the people who are in those families. And Shashwat is not only a Wharton graduate, he's academically, he was something like crazily good. I mean, when I saw his first school leaving exam results, I sort of said, that's the kind of stuff. When I was in school, I would see Shashi Tharoor get those kind of results. So, and then he's worked very hard, he's very diligent. My father was very careful. He was very, very strict with one thing. He said, don't spend too much. Don't let your personal habits be something where you become a slave of your expenditure. And I think that is something that Shashwat and Shivika very strongly follow. And Shivika gets it from her parents, and Shashwat from us. And because of the time he spent with my parents, he gets it from them as well. So I think, and he's doing well. He's performing well. So I'm very confident that the future is in safe hands.
That's interesting. And once we've done with this session, we can find out whether all of what we just heard from Sanjiv is also the way he interprets this, but I won't put him on the spot by asking him now. You know, since we are in the East, before I conclude, I want your sense of, because you're looking at investment opportunities all across, and especially with your presence now in Lucknow, and you mentioned UP as being a focus area. How do you see the different states compete with each other in terms of attracting investors such as you? And we saw the finance ministry put out the ease of doing business in different states ranking recently. From an end user perspective, how do you evaluate this?
Every state is different. So we are investing in a major chemical plant in Tamil Nadu right now, which will start production by the end of December. That's different. When we go to UP, it's different. Bengal is home for us. Maharashtra is different. So Gujarat is different, where we have significant investments. So I wouldn't like to get into a comparison, but I think you all do a great state of the states, and you all do a ranking across parameters. So my mother taught me this when I was young, that never get into a comparison. So I've stayed away from comparing either states or people or kids or anything.
That's like a trapeze artist just deftly going through that question without seeking to offend anybody and getting into trouble later. But I really enjoyed this conversation. Sanjiv Goenka, best of luck to your IPL team. I hope that next time you do better than third. Otherwise, do you ever have this urge, if KL Rahul or anybody else is not performing well, to go, Hato, let me only show you how to do this? Or does it get you to play more cricket or watch more cricket as a result?
Well, I definitely watched more cricket this time. I mean, I watched almost all the Lucknow games, and physically, and all the other games on Hotstar. So I've always watched IPL very avidly, but this time I didn't miss a single game.
Very nice having you with us, Mr. Goenka, at the India Today East Conclave, for taking out time and joining us here. Thank you so much.
Thank you, Rahul. Thank you for having me here.
Thank you so
Thank you,
much.
Kali.
Thank you.